Welcome back. You're watching Midcap Radar here on CNBC-TV18. Let's continue our focus on earnings, and the next management joining us is that of Symphony. The stock is trading higher after reporting a mixed third quarter results. Margins were healthy while the revenues declined on a year-on-year basis. We are joined by Nrupesh Shah, who's the Managing Director of Corporate Affairs at Symphony. Mr. Shah, good afternoon. Thank you so much for joining in. I'd like to ask you about the demand scenario first. How has demand been during the festive season? It's generally the October to December period is generally a seasonally weak quarter, but how has demand been, and how is the demand shaping up as we head into the months of summer?
Thanks for having me. So normally in India, during December quarter and September quarter, hardly any consumer sales happens. We sell with 100% advance to the trade, and that has been reasonably decent enough. However, we have to keep in mind that at the end of summer 23, cooling industry, in particular, air conditioner as well as many years air cooler inventory was lying in a big way, and that has to an extent impacted the performance on a standalone basis. However, it can be seen that despite degrowth in the top line, mainly on account of improved performance of subsidiary companies, our EBITDA margin percentage and gross profit margin percentage has observed a decent performance.
Okay, so there has been a decent performance, and that is something that Street seems to like as well. But Mr. Shah, can you give us a sense of what inventory days are currently, the stock which is lying with the distributors generally and with the company? And what is the outlook on margins from here on? I was looking at the trend last couple of quarters. The last quarter was around 13.5%. Before that, 14.9%. Before that was 8.6%. Will you continue to do these double-digit margins?
Yeah, I think double-digit margin percentage is given. What we have to work upon and working upon how to further improve upon that. That is first and foremost. As far as inventory is concerned, fortunately for Symphony, being a market leader, considering the brand pool at the end of the season, Symphony didn't have much of the inventory either with the trade or with the company. And that was reflected even in the first quarter performance and to an extent even in current quarter performance. What I mean by September quarter and December quarter performance. But it is on account of the inventory of the air conditioners and inventory of the air cooler of our peers. To an extent, there has been some demand impact for Symphony in the quarter during off-season.
Right. Mr. Shah, what is your market share currently in the air cooler segment? In the second quarter, your domestic air cooling market share was around 50% of the organized market, while in volume terms, it was around 27 to 28%. What is the levels currently, and is there a target that you have set for yourself in the quarters to come?
So we very much maintain around 50% market share, which is far higher than the second biggest player. As far as market share percentage is concerned, we don't have any target in mind, but what we have as per our internal business plan, the sales target as well as the profitability margin percentage target. And we are certainly targeting in the medium term decent growth. And more importantly, now internationally the situation has normalized. So we are already getting and will be getting much more benefits of the complementary strengths of international operations. In the sense, earlier for IMCO Mexico and Climate Technology Australia, we were compelled to manufacture locally. Now that is going to be manufactured in India and China. And that's how, as even shipping costs are getting normalized and others, overall external environment is getting normalized, we will be getting much more benefit of those complementary strengths.
You spoke about shipping costs getting normalized. The Red Sea issues are not impacting freight costs in some of the geographies?
By the way, about 1.5 to 2 years before, whatever was international shipping costs, vis-a-vis that, it has substantially rationalized. And at current level, for us, it is making now a lot of sense to outsource that production of IMCO Mexico as well as Climate Technology to India and also to China.
Oh. Oh. Okay, so I just wanted to get a sense of your export market since you're saying that things have stabilized as well. In your presentation, you've spoken about how Australia is seeing demand headwind persisting, and now you're saying that has improved. So what will the export growth look like going from Europe, and will you maintain the current revenue contribution coming in from exports?
Yeah, so when we talk about rest of the world, that constitutes our subsidiary companies' sales as well as export from India. So both put together, they have registered YOY in 9 months about 12% growth. Symphony standalone India has registered about 7-8% degrowth. However, overall profitability margin percentage as well as the profile has improved, and that's likely to continue that way.
Do you expect the Australia business to turn profitable or an EBITDA level, Mr. Shah? Is there a timeline that you can share with us?
We hope so in next year, 24-25. By the way,
Any
in
specific
current
quarter
itself, whatever initiatives we have taken, even on the almost on the same sales, I think the profitability margin percentage is far better than what it was in December 22. Still in losses, but much lower than what it was in December 22.
Okay, all right. So positive commentary coming in from Mr. Shah in terms of business, both on the export side and the domestic side as well. Thank you so much for joining us today and giving us a sense of what demand is looking like on ground and what the outlook is going forward. With that, we'll do one thing. We'll get into another break. When we come back, we'll get you more on the markets and stock-specific action. The stock is up around 2%. Stay tuned.